All right, traders, just a quick update here. It's 11:25, and this is your midday summary, and it's a pretty ugly one at that. You've got, S&P down just getting to 1.3%. You can see we had a quick bounce here on some headlines, and then that was completely erased. But really, what the theme of the day is, besides just the overall equities getting hit, and just kind of look at the chart here in the S&P. I'm beginning to think more and more that we could be getting down and retesting this level because if you look at some names, and depending on what names you're looking at, really the focus is here is growth. Anything growth is getting hit. So there was headlines out about Pence in China this weekend, but mostly the FANG stocks. If you look at FDN, they don't have much exposure to China. I think it's just overall growth. I mean, look at this ETF. This is down. So I'm going to bring up a couple of the growth areas just to kind of visualize this, what's going on right now in this market. But you got FDN, which is your internet ETF, probably less exposure to tariffs, down 3.6%. So really getting hit. This is your mostly your FANG stocks. If you look at IGV, your software group, this is also back to the October low, and it looks like it wants to take out the October low here because this is happening very quickly. If you look at the 5-minute bar, I mean, we're talking about an hour of the day. What concerns me today? I mean, this is big, right? I mean, these are big moves. It's a 4% move in an hour, or yeah, basically an hour and a half. We're talking about. A couple of the market darlings, or growth darlings, I would call them. Salesforce.com, no news, down 6%. And this looks like it might also be headed down back to the lows of the day. That has also taken out the October lows. If you shift over to, a little bit different growth names, if you want to look at biotech, I thought biotech was had a nice bounce this week. Let's see where it closes, but that's also getting hit, down 2.4%. So why isn't the S&P down more? Well, it's really growth versus value. So if you look to see what's in value, I mean, look at some of these names like Clorox today, new 52-week high. It's flat. I mean, these were up earlier. Hormel, which reports after the close today, which I may be looking for a short, is actually reversed. So as I've been kind of looking at some of these from earlier, Coca-Cola, Pepsi, these are our 52-week highs and still going higher here. So this, in my opinion, is the pain trade. The pain trade is everything growth getting sold and value going up. And I see still very little. I see a lot of people just underweight or not exposed enough to really balance out this pain and growth. But I'll tell you. And then if you go over to cyber stocks, another group. This is CIBR that is down 3%. So it's pretty brutal because I think still, investors have probably unwound some of their growth by getting stops, but this group is just getting hit all over the place. What's particularly troubling to me is that the VIX is really not up that much. It's only up to, it's not even up to 20. And the VXN, which is the VIX for the Qs, it is up 10%, but these things should be pushing a lot higher to me. It just doesn't look, and I hate to say this word because I hear it a lot and it kind of bothers me, but complacency. It's you would think with some of these areas being down 3-4%, people would be panicking a little bit more, but it just seems like a slow melt. So you look across, I see gold miners up today. The home builders, I mean, could be that the home builders at this point are a little bit more value. So just kind of sticking with this theme, they got bad news today, but they're actually up on the day. I think just people are, I don't know what kind of a program is being sold, but it seems like this is what's been going on now for a decent clip, is just out of growth completely. You look at the banks. Why are the banks up today? Because the banks are classified as value. So somebody's not selling those today. They're doing okay. They're up. This whole ETF is up 40 basis points. Not stellar, but in a market where some things are down 4%. Again, this is why I continued to advocate not looking at the S&P, but really looking at what's going on in sectors, because this is a move straight out of This is a move straight out of value. Sorry, I've said that backwards. Straight out of growth and into value as I'm trying to show you the representation here. Let me just wait till this comes up here. Let me bring up my value versus growth ETF. So IWD, this is large cap. There's also, you could look at IWO, but take a look at what's happening here. This is a straight out, big outperformance of growth now over the last couple weeks. And if you really, so this was all, this was something that I had in the weekend newsletter, just basically talking about where the money has been going. But if you look at let's say a 5-year chart of this, this could be in the infancy stages of growth, underperforming versus value. Because look at the last 5 years, how much value has outperformed growth. So that's what's going on. I also talked about that SPLV and USMV low minimum volatility is taking a boatload of cash in terms of inflows last week, and also credit spreads are have been going wider. What else in my newsletter that I talked about? Which one of the things that I said, I'm kind of kicking myself, but my strategy was, I didn't think that shorting would be a great idea considering how low sentiment is. But just because sentiment is low doesn't mean people have more to sell. And clearly, even though the Nasdaq sentiment is like at an very close to an all-time low, there's just still more sellers in this group of stocks right now. So eventually, this could be setting up for a bounce. But right now, I think that I'm just avoiding this group altogether until the selling is washed out. Which you could see going back to like a couple of the market. I think a lot of people looking at Adobe as well as one of those stocks, those growth stocks that have held up very well. That's another one with Salesforce that is getting absolutely. Look at the candle today, and that's a clear breakdown. So this to me, this is not good, and I would not be playing in any of these names right here because there's a lot more before we get to support in some of these areas of the market. Let's just go to a weekly chart here in Adobe. So if you're underexposed in this group, the software group that was a real darling of 2017, half of 2018, really breaking down pretty hard. All right, guys. So that's it for today's video. For me, just try to be as light position as light as possible, and then just honor thy stops right now, which I think I'll have to look at. A couple names that I added last week, which I may get stopped out of today. We'll see how today finishes. Is Alibaba. So if it happens, it happens, and just kind of move on and sit back to less trades and higher cash until this works itself through right now. All right, guys. Thanks for watching, and have a great rest of your day.